Hello viewers, welcome to my channel. I'm Hasham Ali Khan. In this video, I'm going to explain you the theory of the topic labor in cost accounting. So this video will be very important for writing the theory question in examination regarding the labor, meaning of direct labor, indirect labor, incentives, different incentive plans, overtime, idle time. These are the topics I'm going to explain you in this video. So watch till the end to get the complete technical knowledge, the meaning of different types, different concepts which are used in labor. So if you have not watched, if you want the problems on labor, visit the playlist of my channel, select the subject cost accounting, select the topic labor. You will get so many problems on labor. But now concentrate only on theory. Now the labor constitutes the second major cost element. The first major element of cost is the material. Next to material comes labor. So it is the responsibility of the management to control the labor cost. If labor cost is not controlled, then definitely the cost of production will increase, the profitability will come down. But comparatively, it is difficult to control the labor compared to controlling the material. Material easily we can be able to control, but controlling the labor will be a little bit difficult because human nature is involved, human sentiments, human emotions, the nature of human being is involved. So it will be difficult to control the labor cost, but still the management's responsibility is to control the labor cost. We have to find out what the issues in wage payment. Now labor can be classified into direct labor and indirect labor. The direct labor means the wages paid for workers who are engaged in converting the raw material into finished goods. That means those workers who are directly on converting the raw material into finished goods. That means the labor charges will be specifically charged on that particular job, on that particular order or activity is called a direct labor. Example, simple example I'll give you. Suppose the business is furniture manufacturing business. In furniture manufacturing business, some carpenters, some workers are working to make the sofa set. So whatever wages we are paying to the worker for making that sofa set is called direct wages, direct labor cost, because the wages are paid specifically for making that product. That is called direct labor cost. Then indirect labor cost. Indirect labor cost. The indirect labor is that labor which cannot conveniently be allocated in producing a particular product, or the labor cost which is generally available to all the products. Example of indirect labor cost like watchman salary, wages paid to watchman, the salary paid to supervisor, the salaries paid to other personnel who are looking after all the activities. So these are called indirect labor cost. Now methods of wage payment. Broadly, two methods are there for wage payment. The first is time wage system, second piece wage system. The time wage system is a system of wage payment where the wages are paid according to time spent by the worker. Example, a worker is paid, let it be 10 rupees per hour. 10 rupees per hour. So on a particular day he has worked for 8 hours. So 8 into 10, 80 rupees will be the wages. That means whatever time he has spent in the factory, accordingly we will make the payment. Per hour we are making the payment. This is called time wage system. So the advantage of time wage system is it's easy to calculate. It will be more advantageous to the worker because they are being paid for the time worked. For the time worked, a guaranteed wage they will get. So that is the advantage of time wage system. But the disadvantage of time wage system is efficiency is not recognized. Everybody will be paid equal amount of wages according to time spent. Some workers are more efficient, some workers are less efficient. The efficiency we are not seeing. We are seeing whether he is spending 8 hours in the factory or not. That is the disadvantage of time wage system. Next wage system, piece wage system. It's a system of wages where payment will be made according to units produced, according to production. For example, in a factory, the piece wage system is per unit 10 rupees. Per unit 10 rupees, 10 rupees. So suppose a worker has produced 10 units. So 10 units into 10 rupees, 100 rupees will be the, 100 rupees will be the wages. The wages depends on the production. If a worker produces more number of units, he will get more wages. Less number of units, he will get less pay. Whatever time he has taken, time is irrelevant. Wages are paid according to number of units produced. This is called piece wage. But again, piece wage system will have their own advantages and limitations. The advantage is easy, we can calculate easily, the workers can understand, the workers will definitely get the wages according to work done. But the disadvantage is the quality may be affected. In order to earn more, even substandard quality of goods will be produced by the worker. Worker will always be in rush to produce more and more number of units to get more wages. So the quality will be affected if we apply piece wage system. So both the system, time wage system and piece wage system, will have the advantages as well as limitations. Now incentives. To overcome the limitations of time wage system and piece wage system, a new system of payment will be made called incentive plans. That means encouraging the workers to increase their efficiency, or efficiency will be honored by paying more wages. That is called incentive. So incentive means over and above the minimum wages which are paid to efficient workers on attaining some targets. So incentives, different incentive plans have been propounded by different authors. The first one is Halsey Premium Plan. Halsey Premium Plan. This is the first incentive plan which was propounded by Halsey. He says worker will be paid according to time. Whatever time he has taken will pay the wages. Apart from that, a percentage of time saved will be paid. Bonus will be paid for a percentage of time saved. For example, if a worker has to do the work in 10 hours, but he has completed the work in 8 hours only. So first of all, we will make the payment for 8 hours. How many hours he has saved? 2 hours he has saved. So we will give a percentage of wages of time saved. Normally the percentage will be 50%. The formula will be T into R plus 50% of S minus T into R, where T is the actual time taken, R is the rate per hour, and S is the standard time, and T is the actual time. So by using this formula, we can get the total earnings as per Halsey plan. Second one is Rowan plan. Rowan plan is also similar to Halsey plan, only the method of calculating the bonus will be different. Here also the wages will be paid for the actual time worked, so T into R. So T into R is same in both Halsey and Rowan, but the method of calculating the bonus will be different. Here Halsey says 50% of time saved, but here Rowan says proportion of time saved to standard time. Proportion of time saved to standard time. So here S minus T is the time saved, S is the standard time. This is the proportion of actual wages. This is the proportion of actual wages. The formula of total earning is T into R plus S minus T by S into T into R. This part is the bonus part, and this is the normal wages. This is the Rowan plans. Taylor's differential piece rate system. These two plans, Halsey plan and Rowan plan, are time based. This is according to time, whereas this Taylor's differential piece rate system is based on piece rate. It is not based on time rate. So Taylor says two piece rates should be applied, a higher piece rate, a lower piece rate. For example, the management, the factory will declare, the employer will declare that we will pay 10 rupees per unit if a worker has produced 100 units or more. If a person has produced 100 units or more, the standard number of units are 100. So if a worker has produced 100 units or more, 10 rupees per unit will be applied. If a worker has produced less than 100 units, 8 rupees per unit will be applied. So two piece rates are there, 10 rupees per unit and 8 rupees per unit. 10 rupees per unit will be applied for those workers who produced up to standard and over standard. Up to and over standard. Those who produce 10 rupees. 8 rupees per unit will be applied to those workers who produce less than standard. Less than standard. In this way, two piece rates are suggested by Taylor's differential. The higher piece rate and lower piece rate. Next comes Merrick's differential piece rate. Another formula is given by Merrick. So Merrick has defined 3 piece rates, not 2. It's the refinement of Taylor's method, modification of Taylor's method. Taylor says 2 differential rates and Merrick says 3 differential rates. What are the 3 differential rates? If a worker has produced up to 83% of standard, if a worker has produced up to 83% of standard, he will be paid ordinary piece rate. Ordinary piece rate. Example, 10 rupees per unit. 10 rupees per unit will be applied if a worker has produced up to 83% of standard. Example, the standard number of units are 100. 100 units is the standard. So if a worker has produced up to 83 units, he will be paid normal piece rate. If a worker has produced more than 83% but up to 100%, he will be paid 110% of normal piece rate. If a worker has produced more than 100% of standard, he will be paid 120% of normal piece rate, ordinary piece rate. So 3, up to 83% ordinary piece rate. 83 to 100%, 110% of ordinary piece rate. Over 100%, 120% of ordinary piece rate. In this way, 3 piece rates are suggested by Merrick. That's it. Now, calculation of labor cost. Actually, the payment of wages are not the only cost incurred by the employer. Suppose I am the employer and you are the employee. So the labor cost is not the only payment made to the employee, but apart from that, a number of other expenditure will be incurred by the employer on employees, apart from wages. So normally nowadays, the employer is paying dearness allowance, house rent allowance, bonus, commission. Apart from that, other non-monetary benefits are also given by the employer to the employee. So labor cost includes all the expenditure incurred on labor. Whether monetary or non-monetary. That is called labor cost. So broadly we divide the labor cost into 2 categories, monetary benefits and non-monetary benefits or fringe benefits. The monetary benefits are the expenditure incurred on labor in money terms. Example, wages are paid, dearness allowance, house rent allowance, commission, bonus, all these are the payments made in cash by the employer to the employee. These are monetary benefits. Apart from that, fringe benefits will be given. Fringe benefits are the non-monetary benefits which the employer gives to the employee or their family members. Even the employer gives the benefit not only to employee but also to their family members. Example, health facility given. Health facility, that means hospital is maintained by the employer for free medical treatment of the employee and their family. Similarly, the education of employees' children is borne by the employer. Similarly, a car is provided, accommodation is given, rent-free accommodation is given, a car is given. All these are the benefits. Similarly, a canteen is maintained by the employer which provides subsidized food to the employees. So all these are the benefits which are given by the employer to the employee, not in cash but in kind. So these are called fringe benefits. Next topic is overtime. Overtime means a worker working more than the normal time per day or per week. Example, a factory says 8 hours is the normal working time per day. So if a worker works more than 8 hours per day, that will be treated as overtime. Similarly, some factories says a worker has to work 48 hours in a week. So if a worker works more than 48 hours in a week, he is going for overtime. So sometimes overtime is resorted as a compulsory measure. For example, there is a rush work. there is an emergency work or the work has to be done fast, in that case overtime has to be done. If overtime is done continuously, it will be disadvantageous to the employer because the wages paid for overtime will be higher than the wages paid during normal time. If a worker is paid, let it be per hour 10 rupees. Per hour 10 rupees are the wage rate paid during normal hours. So if the same worker is working overtime, he should be paid 20 rupees per hour. Double the rate he will be paid. So there are two disadvantages to the employer if the employer resorts to overtime. What are the two disadvantages? First disadvantage, higher rate has to be paid. Instead of 10 rupees, 20 rupees per hour has to be paid. Second disadvantage, when the worker is working overtime, his efficiency will be lower because already 8 hours he has spent. Now over 8 hours, his efficiency will come down. Efficiency will come down. So more wages will be paid. So that will be disadvantageous to the employer. Now treatment of overtime wages. The overtime wages depends on why overtime work has been done. If overtime work has been done because of the request of the customer, then it will be treated as a direct wages. Suppose overtime will be worked because of emergency situation, then it will be treated as a factory overhead. Now this is the treatment of overtime. Idle time. Idle time means the time for which payment is made but the worker is not working. The worker is not working but payment of wages are made. That is called idle time. So idle time again are divided into two categories: normal idle time, abnormal idle time. Normal idle time means the unavoidable idle time. The idle time which cannot be avoided at all. The wages has to be paid. Example, when the worker is coming to the factory, the time taken from coming from the factory gate to the place of work, the time is lost. The employer is paying the wages, but the time is lost. Similarly, there is a time lapse between completing the one job and starting the another one. That is also a unavoidable loss. Similarly, some personal time like lunch break, tea break. So these are the times allowed by the employer to the employee for which no deduction of wages will be made. The wages are paid, but the worker is not working. That is called normal idle time. Then abnormal idle time. Any idle time which is over and above normal idle time is called abnormal idle time. This abnormal idle time will arise on account of power breakdown, power shutdown, or machine breakdown, or lack of material. There is lack of material. Material is not there, so workers are idle. So this is abnormal idle time. There is a power breakdown, power shutdown. Due to power shutdown, machine stopped. Then this is a abnormal idle time. Similarly, there is breakdown of machinery. All of a sudden machinery broke down. So again, there is no abnormal idle time. So abnormal idle time is avoidable. The management has to take the steps to avoid this abnormal idle time. So in examination, you may get a theory question regarding explain about idle time, normal and abnormal. Similarly, explain about overtime and explain about labor cost or different incentive plans. Like this theory question you may get in examination. So this is the completion of the theoretical part of the topic labor. We'll continue this in the next video.